CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Samoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners.
Okay, guys, as you can see, the Bitcoin moved down. So I will move, I will just cancel order, as you can see, just up here. I will cancel order to sell short. So please do cancel your order as well. And let's see what's going to happen with this position. If it will move lower, we will place stop on profit. Okay, guys? Stay safe.
When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the community biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Interactive Brokers studio, it's Thursday, June 10th, and this is Bloomberg Business Week. I'm Tim Stenovic. Carol is off today. A good afternoon to our audience on the radio and on YouTube as well. Coming up on the show, inflation. Well, those CPI numbers coming in hot, but both the equity and bond markets kind of shrugging them off. U.S. stocks trading around all-time highs. And buying into that transitory story, perhaps we're going to explore. We've got it all on today's show with the latest from the virus, with the director of the Johns Hopkins School of Public Health, Director of Health Security, Amish Adalja, joining us. Then to Cornwall, where we're going to hear the latest on President Biden's meeting with UK Prime Minister Boris Johnson. And speaking of presidents, Florida's Trump coast is the beating heart of the Republican Party. Bloomberg Business Week's Josh Green went to South Florida to explore sunshine, golf, and money, and an alternate universe that revolves around Mar-a-Lago. You're not going to want to miss it. We're also talking the latest with Tesla, and we caught up with none other than Buffett, and not Warren Buffett, Jimmy Buffett, who gave us the details of his new $300 million resort in the heart of Manhattan. He even weighed in on crypto. Here's a hint. He's into it. First up, though, a check of the trading day with Charlie Pellet.
Thank you very much. Let's begin with crypto. We've got Bitcoin up now by 0.2%, 36,473 on Bitcoin. The Dow, the S&P, NASDAQ all advancing. I'm looking at a record right now on the S&P, up 25, 42.44 on the S&P, up by 0.6%. Got to keep it locked into Bloomberg Radio for the very latest right here on Bloomberg Business Week, where we see a record close on the S&P. And of course, what about Asian markets tonight? How will they react? The Dow's up 123 now, up 0.4%. S&P, by the way, 42.44. Nasdaq up 109, higher by 0.8%. 10 years now up 7.30 seconds. 10-year yield 1.46%. Gold up $6 the ounce, up 0.3%, 18.94. And West Texas Intermediate crude up 0.3%, 70.17 a barrel. Briefly after earnings, GameStop shares plunging now by 21.9%. Among some of the other meme stocks, we've got AMC Entertainment down 11%. Wendy's lower now by 4.7%. Clover Health trading lower by 11.8%. I'm Charlie Pellet. That, Tim, is a Bloomberg Business Flash.
All right, thank you so much for the update, Charlie Pellet. Let's get to the Market Drivers Report. And joining us now to help set the Business Week agenda is Stocks Editor Dave Wilson here at Bloomberg News. Joining us from the Bloomberg Interactive Brokers Studios, also here with me now, Michael McKee, International Economics and Policy Correspondent at Bloomberg News. He joins us here in the Interactive Brokers Studios as well. Michael McKee, I want to start with you. Those numbers coming in hot this morning, but the equity and bond markets shrugging them off. Why?
Well, we indeed had some strong inflation numbers. Not as strong as last month on a month-over-month basis, but they did push up the year-over-year price level to things we haven't seen in many decades. The CPI headline, 5%, up higher than it's been since 2008, and the core at 3.8%, the highest it's been since 1992. So yeah, the natural
those are some superlatives.
Natural inclination would be to think that people would freak out, but they don't, and it seems to be Fed credibility that the markets believe that the Fed is going to keep inflation under control. And when you look back at the bond market over the years, it looks like bond traders tend to look backwards at inflation and inflation dynamics. In 1973, they did not react when we had the Arab oil embargo and inflation went way up. And then when inflation went way up and we had to have Paul Volcker come in and kill it, CPI inflation went down really fast, but the bond market only gradually lost altitude, and took 26 years to bring the bond market yields, the 10-year yield, down to around where inflation was. So they're looking backwards, and it suggests the Fed is right, that inflation dynamics aren't going to change so rapidly that the bond market has to react. And of course, if bond yields stay low and the Fed stays low, that's good for equity earnings.
Well, is part of the story, Mike, the fact that if you look under the hood of these numbers and you look closer at these numbers, what you see are large increases for things that do indeed, and I hate to use this term because it's the term that the Fed uses, transitory,
I knew
like
you were
used
going to
car
go with the
prices.
T word, yeah.
Drink.
Transitory, temporary. Yeah, that's true. It was the same story as last month.
Yeah.
Airfares went up, used cars went up, rental cars went up. The things that people did not use and lost value during the pandemic, airline ticket prices were cut to the bone just to try to get anybody on the planes, and now they're trying to get them back up to normal. They're not even where they were before the pandemic, but the percentage increase is large.
Okay, some really important context there. Dave Wilson, come on in here and give us the equity market reaction in today's trade.
Well, I mean, you saw initially stocks reach their high of the day, then pull back, and they've been working their way up as things go along. You know, interesting in the wake of all this inflation data to see the interest rate sensitive areas of the market moving higher, specifically real estate and utilities. Real estate actually the second best performer on the day among the 11 main industry groups in the S&P 500, behind healthcare, which has really kind of picked up the last couple of days. And financial stocks, I mean, talk about a group that's tied to higher rates and has benefited over the last several months as we've seen bond yields go up. Well, they're the worst performers on the day. Their industry gauge in the S&P 500 down 0.4%. So it really does show you, put it all together, you know, the consumer price report kind of setting the tone for the market here.
Okay, but the information technology sector higher by 0.7% right now. I mean, usually when we'd see a higher than expected print, we'd see pullback in tech, right?
Well, I mean, things are kind of holding up. You know, you look at Microsoft, you look at Apple. Apple's down a bit, but Microsoft up 1.3%. So, you know, they really, in large measure, define tech. And then you have some of the groups that are in the big tech sort of umbrella doing well. Communication services, where you find Google's owner Alphabet, as well as Facebook, and the consumer discretionary category, home to Tesla and Amazon, among others. So, broadly speaking, you are seeing, you know, strength in that group, even in the face of the inflation figures.
Michael McKee, FOMC meeting coming next week. Does today's print change the question that you'd ask, the question that you will ask?
No, I don't think so. The dynamics remain the same. And so people are going to be kind of looking at this Fed meeting the way they looked at the ECB today is as long as they don't surprise us with anything, we're just going to be fine and go about our business. The feeling is it's not so much the meeting as when we get the minutes of the meeting to find out if they talked about tapering at all. And then we'll wait until the next meeting, and maybe it gradually builds into the end of the year when we get some sort of indication of when they would. But nobody expects anything to happen this time.
All right, that's Dave Wilson, stocks editor at Bloomberg News. And then you just heard from Michael McKee, international economics and policy correspondent at Bloomberg News, both of them joining me in the Bloomberg Interactive Brokers studios right here in New York. Dave Wilson will be back in just a little bit, a little after 3:30, with his chart of the day, his stock of the day, and of course, his song of the day. Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is 36. The U.S. will remain the global hotspot for the world's super rich in the near future, even as Asia's wealth grows, Boston Consulting Group research has shown. The number of ultra-high net worth individuals in the country will jump 36% in 2025 compared with last year. China and India should lead percentage growth of fortunes worth $100 million or more for the same period. It's a question certainly plaguing the Biden administration when it thinks about raising taxes on the wealthiest Americans. And that's certainly something that will be continued to be talked about, especially when Biden gets back to Washington, D.C. after his international trip. Well, we have a packed show coming up today. Our interview with none other than Jimmy Buffett, all about his new more than $300 million resort in the heart of Manhattan. He also weighed in on cryptocurrency. Then we're going to Cornwall, where the Biden administration is there for the meeting with Prime Minister Boris Johnson. And we're going to get the latest from there. In the meantime, though, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden has been detailing the program in which the U.S. will provide COVID-19 vaccines to the world. He says the donation comes with no strings attached.
These 500 million vaccines will start to be shipped in August, as quickly as they roll off the manufacturing line. 200 million of these doses will be delivered this year, 2021. And 300 million more will be delivered in the first half of 2022.
President Biden is in the United Kingdom, where he met earlier today with Prime Minister Boris Johnson. They discussed the pandemic as well as China and climate change. America's image around the world has improved sharply since President Biden took office. That's according to a new Pew Research Center survey that was conducted in 16 countries, including many longstanding allies of the U.S. The surveys show majorities of the public across the countries express confidence in Biden to do the right thing in world affairs. Defense Secretary Lloyd Austin is defending his budget during testimony before a Senate committee today.
The department must be ready to meet and keep pace with our competitors, and if necessary, to fight and win the next war, and not the last one.
Austin also told lawmakers the U.S. troop withdrawal from Afghanistan remains on track. The wife of Mexican drug kingpin Joaquin El Chapo Guzman has pleaded guilty to conspiracy and distribution charges in the U.S. As part of a plea deal during her court appearance today, Emma Coronel Aispuro admitted she helped her husband run his criminal empire. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that, Nancy. Tim Stenovic, live in the Interactive Brokers studios. This is Bloomberg Business Week. I'm joined by Charlie Pellet. Charlie, good afternoon. A story that caught my attention today was one in the New York Times by Lauren Hirsch that says that Goldman Sachs is requiring its U.S. employees to report their vaccination status.
Indeed, not just report it, Tim, but report it by noon as of today. The bank sent out a memo informing its U.S. employees that they had to register their vaccination status, and the company says, quote, that allows us to plan for a safer return to the office for all of our people as we continue to abide by local public health measures. Disclosing vaccination status had been optional at the bank.
Yeah, that's a really good point, Charlie. And it does seem like we are going to start to see increasingly stories such as this. As the economy continues to reopen, we followed very closely the way that the big six banks here in New York have come back to work and had their employees come back to work. And one question that I think a lot of employees have with this new normal, and employers have with the new normal, is to what extent can they ease up on the regulations inside the office and to go back to the idea of something that is some semblance of normal?
Indeed, and I don't know about you, but the first time I read this story, one of the questions in my mind was the legality of this, and the New York Times answered that question. It said that the Equal Employment Opportunity Commission made clear this month that it is legal to ask employees for their vaccination status as long as firms keep medical records confidential. I would have no problem. It would take me, not a matter of minutes, but it would take me some time to locate my my vaccination form, located with my passport at home. I'd have to go ahead and find it. But on the other hand, I could pull up the information on the app here in New York State. We do have an app that allows you to do that quickly, easily. And I've only been asked once, and that was for a rock climbing place in Brooklyn that wanted to see my proof, and I was able to pull it up on my phone.
Proof that you're having more fun than I am. I've never been asked for it because I don't actually do anything. But I do have the app, so if I'm asked, I know what to do. This is Bloomberg Radio, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. A hot CPI report. The Dow, the S&P, Nasdaq all advancing. S&P trading at a record. Benchmark Treasury yields holding around the lowest since March as investors assess data that showed consumer prices rose more than forecast last month. S&P up 24 right now to 42.43. That is a gain of 0.6%. The Dow up 110 points, up 0.3%. Nasdaq up 105, up 0.8%. 10-year yield 1.46%. 10-year up 7/32. Gold up 0.3%. 18.95 the ounce. West Texas Intermediate crude up 0.6. 70.34 for a barrel of WTI. Nasdaq 100 index up 1%. Russell 2000 down 0.3%. Dow Transports also lower by 0.3%. Bottom line, S&P at a record up 0.6. Among the names reporting after the close of trading today, we will be hearing from Chewy, shares up 1%, and Dave & Buster's, ticker PLAY, shares now lower by 3.3%. I'm Charlie Pellet. It's a Bloomberg Business Flash.
It certainly is. Thank you so much for that, Charlie Pellet. Well, President Biden says donated Pfizer shots will start to ship globally in August. He announced the U.S. will begin shipping 500 million donated doses of Pfizer coronavirus vaccines to countries in, quote, dire need in August, that making good on a promise to lead the global campaign against the pandemic. Joining us now on this and more is Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. He joins us on the phone from Pittsburgh. Dr. Adalja, it is great to have you back on the show. I want to start with this 500 million donated doses of Pfizer vaccine. It sounds like a lot, and to be sure, it is a massive number. But given that the globe needs billions to get past this pandemic, isn't it still just somewhat, I don't want to say a drop in the bucket, but not quite enough?
Well, it's a step in the right direction, and there are going to be more donations, more purchases of vaccines by the developing world, the COVAX program, other organizations getting vaccines into people. But the more vaccines, even if it's not enough, the more that are getting into people's arms, the better the global trajectory of the pandemic looks, especially if you're trying to vaccinate healthcare workers, high-risk individuals. I think this is a significant donation, and it is something that would be very welcome in those countries.
You know, availability of vaccine is certainly one thing, but the administration of vaccine, especially a vaccine that has to be stored in a way that the Pfizer mRNA vaccine has to be stored, is a completely different thing. What do these countries need to be doing ahead of time to make sure that they can actually have a campaign that effectively can administer this vaccine?
The first thing they have to do is make sure that they can ensure the cold chain. The Pfizer vaccine has, as you said, really onerous storage requirements. So they have to make sure that they can actually handle that vaccine. Then it's about logistically figuring out where you're going to vaccinate people. Is this going to be at vaccine centers? Is it going to be at healthcare centers? Are there going to be other places where this vaccine is going to be available? You also have to think, do you have enough syringes? Do you have enough needles? Do you have the alcohol swabs? Do you have enough personnel to actually administer the shots? All of that planning has to be put into place when you're planning something like this. And that's going to be really important for those countries to kind of pre-position and be ready to go when they get the vaccine.
Now, we've talked to you a lot in the past here on Bloomberg Radio and on Quick Take about variants of concern that have developed around the world. And one narrative that has emerged over the last few months as the U.S. has been vaccinated increasingly, but other countries have not, is the idea that we're not on the other side of this pandemic until the entire world is. And it's not just an economic story, but it's also a story of public health. And the concern, worst case scenario, was that some sort of variant develops and it goes kind of unchecked in a country that is not completely vaccinated or does not have a high level of vaccine. And that variant then can get past the vaccines that have been approved for emergency use authorization in certain countries. And I wonder if there's any evidence at this point, here we are June 10th, that could still happen or that has happened.
There's no evidence that any of what we would call variants of high consequence, ones that are able to cause serious disease in fully vaccinated people, have emerged. And it's a very hard thing for a virus to do, because it's not just that they have to evade the antibodies generated by the vaccine, it's also the T-cell immunity. And it seems that T-cell immunity, which is a whole different arm of your immune system, is very robust. And when faced with the variant, even if it can get around the antibodies, the T cells prevent the infection from progressing to serious illness or needing hospitalization. And I think that's almost like a biological fact that it's going to be a very hard constraint for that virus to get around. Yes, it's biologically plausible, but do I think it's going to happen? No. But I think the other point is that even from an individual perspective, we have a significant proportion of the U.S. population that is not vaccinated, and those variants are going to be able to infect them. Those variants are going to be able to cause serious disease. Even if hospitals aren't in crisis, there's still an individual threat to health from COVID-19. So that's why we want to get vaccine rates as high as possible, even when the public health emergency aspect of this pandemic is over in this country.
But President Biden has the goal, and he laid out this goal weeks ago, to have 70% of American adults have received one shot since the 4th of July. We're just over 60% right now. Do you think we're going to make it?
It's going to be very challenging. It's very difficult to now find people who want to be vaccinated. We've kind of gotten through everybody that wants to be vaccinated. We've made it very convenient. You can get vaccinated in the subway in New York City. You can get vaccinated at strip bars in Las Vegas. You can get vaccinated on the beach. You get free beer, free donuts. You get lottery tickets. So you get bonds in West Virginia. A lot of incentives are there. So it's becoming hard. I don't know that we're going to actually reach that goal, but to me, I think it's important to strive for it and to continue, even if we don't meet that goal at 4th of July, to still continue to push forward with vaccines, because the more this population in our country is vaccinated, the more resilient we're going to be, the less disruptive COVID-19 is going to be, and the quicker we can kind of put all of this behind us.
In addition to those prizes, in some places you also do get protection from something that a lot of people really don't want. I wonder, Dr. Adalja, just in the last minute we have, and then you're going to come back with us after we do some news, what from a public health perspective, messaging perspective, seems to be working to get those people who have held out in the last 30 seconds?
The best message is the fact that these vaccines improve your personal life, just as you said, that this protects you from a serious infectious disease. It makes you no longer a threat to others, and it makes the virus no longer a threat to you, and it allows you to get your life back. And I think that's the best way to message this. And it took some time for the CDC to actually get on board with that message, but that's the true one, and that's the correct one.
Yeah, I feel like I'm a superhero. I've said this before, but I feel totally comfortable doing things that for the last 14 months I was not comfortable doing. I cannot recommend it enough. Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins at Bloomberg School of Public Health. He's going to be back with us in just a few minutes. He joins us on the phone from Pittsburgh. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg. He's the founder of Bloomberg LP and Bloomberg Philanthropies. Coming up in just a few minutes, we're going to Cornwall for the latest on the G7. This is Bloomberg Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. I'm Tim Stenevec in the Interactive Brokers Studios in New York. In just a few minutes, we're going to get back to Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. We're going to focus the second half of our conversation on what we can expect for kids during the coronavirus pandemic and during the vaccination process. Here in the U.S., vaccine is approved for kids 12 and up, but there is still the question of millions of American children who are not yet eligible for the vaccine. All that and more coming up in just a few minutes. In the meantime, let's get back to Charlie Pellet with an update on the trading day.
And we're looking at records with the Dow, the S&P, Nasdaq, all advancing. Tim, right now the S&P up 21 with a record 42.41, higher by 0.5%. Developing story we're keeping an eye on according to sources. Sci5, that's a startup that designs semiconductors, has received takeover interest from investor Intel Corp. Intel said to be offering to acquire Sci5 for more than $2 billion. Equities trading at records, benchmark treasury yields holding around the lowest since March as investors assessed data that showed consumer prices rose more than forecast last month. The Dow is up 87 points now, up 0.3%. S&P up 21, up 0.5, again a record there. Nasdaq up 98, higher by 0.7%. Nasdaq 100 index up 0.9. Both the Russell 2000 and Dow Transports are both moving lower. Gold up 0.4%, $18.95 the ounce. And West Texas Intermediate crude up 0.4, $70.25 a barrel on WTI. President Biden has announced the U.S. will begin shipping 500 million donated doses of Pfizer coronavirus vaccines to countries, quote, in dire need in August, making good on a promise to lead the global campaign against the pandemic. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health. She was interviewed ahead of the formal announcement.
I'm really heartened to hear of these plans, but the ultimate impact will be judged by how quickly we can get them into arms, because this pandemic continues to rage. It continues to cause staggering numbers of cases and deaths, and really time is the enemy here, so we need to move very quickly.
Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up 2% right now, 40.61 on PFE Pfizer. Its German partner BioNTech, the ADRs down 0.9%. AstraZeneca's ADRs up by 2%. Moderna up by 0.5%. Johnson & Johnson up 0.9%. Recapping, stocks higher, S&P trading at a record up 0.5%. Gold up 0.4 right now, $8.95 the ounce. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, thanks so much for that update, Charlie Pellet. Let's get right back to Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. He joins us on the phone from Pittsburgh. We just heard from your colleague, Dr. Jennifer Nuzzo, about how important it is to get those vaccines in arms as soon as possible, Dr. Adalja. And one reason that we like to talk to you each and every week, and as much as possible, really, is that you're out there each week on the front lines still, and you have been throughout the pandemic, visiting patients. And we've been able to get updates from you about what it's been like throughout the pandemic. And I wonder now what you're seeing with the coronavirus, but also with other types of viruses that could be flaring up right now.
So with coronavirus right now, it's very low, and I work clinically in the Pittsburgh area, and the hospitals are in good shape, and the people that we are seeing come in with coronavirus are those who are unvaccinated. It's largely become a disease of the unvaccinated now, and it's not something where we see ICUs kind of busting at the seams or very many patients at all. So it's a really good situation we're in with COVID. But what we are starting to see are other respiratory viruses kick back up. Other coronaviruses, not COVID-19, but others, RSV. The CDC just released a health alert about RSV increasing in the South. That's a childhood viral illness. So we are seeing some normalcy returning to the kind of viral ecology. where as people stop social distancing, as people put away their masks for good reasons because they're fully vaccinated, you're going to start seeing some of our other old, well-known pathogens starting to come back, and we have to be prepared for those as well.
Remind me, RSV, is that something that kids can get vaccinated against?
No, RSV is not something kids can get vaccinated against. This is something that puts a lot of babies in the hospital, lots of young kids. It's often for older people, it might be more of a bronchitis type of symptoms, but it's something that kind of plagues children every year. But we're starting to see that kick back up, and I suspect you're going to start seeing colds. People have been going a year without having any colds. Those are going to start coming back, and I've increasingly seen people who have viruses, who have symptoms that 6 months ago I thought would definitely be COVID, but they're testing negative for COVID because they're likely other viruses now that are just chomping at the bit, basically, to get back to the work that they do every year.
Yeah, it's interesting. It's not good news by any means, but it is one measure of a return to normalcy, right?
Yeah, I don't think it's not good news. Obviously, these are disruptive things. People get hospitalized with them, but it's something that, in the past, it was very hard to even see any other viruses because COVID was so dominant and dominating the whole viral landscape that I think I took care of one influenza patient during this whole this pandemic. That's very, very rare. So this tells you that, COVID is receding, that this is a real signal that we're seeing with cases dropping and people getting back to life. And part of getting back to life is dealing with the respiratory viruses that we deal with every year. And eventually COVID is going to be one of those respiratory viruses that we deal with every year.
Yeah, that's what we do keep hearing from experts like yourself. Dr. Adalja, you mentioned what kids are being infected with, what you're seeing when you do your rounds. I'm wondering, back to coronavirus, about how we should be thinking about vaccinating kids, especially those under 12. As we do know, there are trials happening in the United States to test the efficacy and safety of coronavirus vaccines in kids. Do you expect that those will get approved for emergency use authorization?
I do expect that they will get approved, likely at a lower dose. What's going on right now is that the clinical trials, there'll be data coming from there on both safety and efficacy, and I suspect that the FDA and the CDC will recommend that for children. I think it's important to remember that you have to do trials in different age groups because as you get to those younger age groups, the risk of severe disease from COVID-19 becomes very, very small, and the risk of transmission of COVID-19 from small children is also low. So there is the benefits of the vaccine are more blunted in a 6-year-old than they are in a 60-year-old. So that's why we have to do special trials. We have to have special discussions about the dosing and all of that. And I think it's going to progress, and I think we'll get there eventually. The impact is going to be more so on getting children back into activities in a safer manner, mostly because of the adults being kind of fearful of COVID-19 rather than actually like a huge epidemiological impact you're going to see when we vaccinate below the age of 12.
When do you expect a date that we'll start to see this, just in the last 10 seconds?
I've heard rumors that this likely will be before Thanksgiving.
Okay.
When we'll see that.
Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. He joins us on the phone from Pittsburgh. The Johns Hopkins Bloomberg School of Public Health, it is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. This is Bloomberg Business Week, and this is Bloomberg Radio. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden says the U.S. will start shipping 500 million COVID-19 vaccines to countries in need by August with no strings attached.
We're doing this to save lives, to end this pandemic. That's it, period.
Biden is in the UK and met earlier today with Prime Minister Boris Johnson. Defense Secretary Lloyd Austin is assuring lawmakers the administration really needs $715 billion for his department. That's $11 billion more than Congress enacted last year.
Republicans, including Senator Roger Wicker, pointed to China's growing strength.
This is an inadequate defense budget.
Secretary Austin.
Our budget request will help us match resources to strategy, strategy to policy, and policy to the will of the American people. It funds the right mix of capabilities that we need most to defend this nation now and in the future.
Austin was asked about possible use of air power in Afghanistan, even after the U.S. military exits. He said only that some current air missions originate in the Gulf, and some could be added in neighboring countries. In Washington, Irv Chapman, Bloomberg Radio.
FBI Director Christopher Wray says the biggest threat in the U.S. right now is violent extremism motivated by ideology. He, too, was testifying today on Capitol Hill.
Violence in any form in support of any set of beliefs cannot and will not be tolerated, because violence undermines one of the most basic freedoms of all Americans, the right to feel safe and secure in our own homes and communities.
Wray came under fire for the intelligence failures ahead of the insurrection January 6th. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that, Nancy. Tim Stenovec in the Bloomberg Interactive Brokers studio in New York. I'm joined now by Charlie Pellet. Charlie, as we do attempt to get back to this new normal, at least in a handful of countries that have been lucky enough to have vaccine availability and distribution, we are starting to see different ideas for the timeline of when things will start to get reopened. The latest example is the United Kingdom.
Indeed. Can't wait for that announcement. I would love to get on a plane and travel. Today we heard the airline executives really saying that because people on both sides of the Atlantic have been vaccinated, it is time to resume air travel. But we are due on Monday to hear from the UK Prime Minister Boris Johnson on whether he will lift remaining curbs. Speaking of lifting curbs, here in the United States, just getting word a moment ago from the Washington Post that U.S. agencies can lift caps on the
news, headlines, and
Bloomberg World Headquarters. I'm Charlie Pellet. S&P 500 climbing above its record in afternoon trading. 10-year Treasury yields at the lowest since March. Let's begin with the 10-year. 1.46% right now on the 10-year yield. 10-year up 930 seconds. S&P at a record 4240, higher by 20 points, up by about 0.5%. Current record on the S&P 4232, closing high there. We've got the Dow and Nasdaq also advancing right now. The Dow's up 80, a gain of 0.2%. Nasdaq up 102, higher by 0.7. Nasdaq 100 index up by 1%. A retreat for both the Russell 2000, down now by 0.4%. Dow Transport's down by 0.4%. Benchmark Treasury yields holding around the lowest since March as investors assess data that showed consumer prices did come in a little hotter than expected last month. S&P breaking above its record as all the main American equity indexes advanced in today's trading. We've got gold up 0.4, $18.95 the ounce. West Texas Intermediate crude trading above $70 a barrel, $70.21 up 0.4%. Among some of the so-called meme stocks, GameStop making a number of announcements last night. GameStop shares after earnings down now by 25.7%. AMC Entertainment down 12%. Wendy's, another big mover in recent sessions, lower today by 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much for that update, Charlie Pellet. Well, a story in the new issue of Bloomberg Businessweek magazine required national correspondent Josh Green to head south to Florida, where he spoke to many of those who've been lured south by sunshine, golf, and money. A lot of them the former president's allies and hanger-ons, and they've formed an alternate universe that revolves around none other than Mar-a-Lago. Joining me now is Josh Green, national correspondent at Bloomberg Businessweek. He joins us on the phone from Washington, D.C. Also, Joel Weber, editor of Bloomberg Businessweek. He's here with me in the Bloomberg Interactive Broker Studio. Joel, there was the question of what the post-presidency Trump would look like. And it turns out that he's still very much active and a kingmaker.
I kind of don't think anybody saw what this now looks like coming, and that's why when Josh mentioned that he wanted to do this story, we were like, yes, get on a plane. And he goes, I'm not vaccinated. I can't do it yet. And this was obviously months ago. And we were like, get vaccinated as quickly as you can. And he was like, I'm trying. And when he finally got vaccinated, it all worked out and we got him down there. Josh, tell us about what you found in South Florida.
Yeah, well, I mean, basically, I went down to kind of solve a mystery that a lot of people have wondered about, which was, after January 6th, a lot of people wondered, will Trump maintain his grip on the party or will he kind of dwindle into insignificance? A lot of Republicans I talked to back then thought he was just going to kind of go away and be forgotten about, but he hasn't been. And so I went down to Florida to kind of investigate his world. What I found was, Trump isn't like any typical ex-president. He really lives down in Mar-a-Lago, kind of like I describe him as a foreign monarch cast into exile, because not only is Trump down in Mar-a-Lago, but a big contingent of the Republican Party, including his own family and kind of ancillary Fox News figures, have moved down there with him. So it's sort of like, an administration out of power that has nonetheless managed to tighten its grip on the Republican Party at a time when many people thought after the riots and the deadly violence on the Capitol that the party might move on from Trump.
Yeah, well, I think there's probably no better example of the party not moving on from Trump than the physical moving of people from parts of Florida to other parts of Florida. You spoke to Eddie Vail, a Democratic strategist, who said, think about how bizarre that is, referring to Ivanka Trump, Sean Hannity, Neil Cavuto, Kevin McCarthy, all people who have made their way down to this part of Florida. He said it's like if Rachel Maddow and the Pod Save America guys all bought condos in Chicago because they wanted to be close to Barack Obama. How does this represent the future of the Republican Party?
I mean, I think what it shows symbolically is that Trump is still the center of gravity and that he isn't going to cede the spotlight. I mean, one of the remarkable things about Trump's post-presidency that I think we don't really step back and think about is that if you look at the last two one-term presidents, Jimmy Carter George H.W. Bush, they were immediately branded as losers by their own party, which was eager to move on from them and did so. And yet Trump, even though lost re-election by 7 million votes, has managed to maintain a grip, not just on the party, not just on kind of the institutional party, but on right-wing media, on the hearts and minds of activists. All you have to do is look at House Minority Leader Kevin McCarthy, who criticized Trump in the wake of the insurrection, going back 2 weeks later to Mar-a-Lago to visit and try to raise money and kind of bend the knee to Trump, to see that Republican politicians, they're not going to stand up to him. And not only that, if you look at the direction of Republican policy, across the country, in states across the country, there are new voter restriction laws in the works. All of this is a reflection of Trump's influence, continuing influence on the party.
Josh, you spoke to almost everybody I could think of that you could have quoted in the story. You did, and I'm just wondering, everybody from Sean Spicer, who's down there, on down. Who was your most favorite person to speak to? Who gave you your most favorite insight?
I think that the guy I like most, and he is a key character with a memorable scene in the piece, is a former White House spokesman named Hogan Gidley, who was hanging out shirtless poolside at one of the hot Trump hotels down there. Hogan had done a swing through there to raise money for a pro-Trump group that he started, but he really explained the kind of sociology and taxonomy of the extended Trump universe. And I came away understanding that it isn't just that politicians are afraid of Trump, it's that the entire Republican consulting infrastructure, at least a large part of it, remains dependent on Trump for their livelihood. They can't go and get jobs at Uber and Amazon like Obama administration officials did. They're sort of considered radioactive, I think, especially after January 6th. And so they've gone out and started conservative groups to push things like voter restrictions that are very Trumpian. And in doing so, they've kind of created a very real power structure that allows Trump to maintain his hold over the party. And as I say in the piece, position himself as the front runner in 2024 if that's what he decides to do.
The line that Gidley gave you while drinking what beverage? What beverage was that, Josh?
Virgin berry spritzer.
Sounds like a soda.
He wanted to emphasize that it was virgin, not alcoholic, because it was like at 10 in the morning. So let the record show that Gidley wasn't drinking alcohol. But it was a very delicious $16 virgin berry spritzer.
But the line the quote that he gave you, it was so memorable to me. But you never take your line out of the water while the fish are still biting. And I just I got it when you did that. So
and that really sums it up. That's what all these Republicans consultants are doing. They understand that their livelihood still flows from Trump, and so they're responding accordingly.
What does this portend for 2022 and then 2024?
Well, for 2022, it's clear. When I was down there, I spoke to everybody from former staffers to big billionaire Trump donors to consultants, and everyone, for their own parochial reason, is really depending on Trump to bring out the Republican vote in 2022. They all want Republicans to win back the House of Representatives, which I think is quite likely, but they understand they need Trump to pull out his voters. So they have a kind of an instrumental use for Trump that I think helps keep him front and center. The interesting dilemma for them is most of these people, I think, do not want Trump to run in 2024 because they don't think he can win. And they're sort of stuck because nobody really has a convincing story for how they can use him next year and then get rid of him before 2024.
Well, it is a fantastic feature that is in the new issue of Bloomberg Businessweek magazine. It's also today's Bloomberg Big Take story. You can read more at bloomberg.com/businessweek. That's Josh Green, national correspondent at Bloomberg Businessweek, and Joel Weber, editor of Bloomberg Businessweek, with me in the Bloomberg Interactive Brokers studio. For those of you listening in New York, Washington, D.C., and San Francisco, or watching on YouTube, Bloomberg Businessweek continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Thursday, June 10th, we've got the Dow, the S&P, Nasdaq all advancing. The Nasdaq 100 index up by 1%, a retreat for the Russell 2000 and Dow Transports. S&P right now at a record 42.42, up 22 points, up 0.5%. Equities climbing to records. Benchmark Treasury yields holding around the lowest since March as investors assess data that showed consumer prices rose more than forecast last month. The Dow up 87 right now, up by 0.3%. S&P up 22 at a record, up by 0.5%, extending its year-to-date gain now to 12.9%. Nasdaq up 112, up 0.8 so far this year. Nasdaq is up 8.1%. We've got the 10-year yield 1.45%. Gold's up 0.4%, 18.95 the ounce. And West Texas Intermediate crude up 0.4%, 70.23 a barrel on WTI. European Central Bank this morning renewing its pledge to maintain faster emergency bond buying despite significant upgrades to its outlook for growth and inflation as it attempts to sustain the euro area after more than a year of debilitating economic crisis. Here's ECB President Christine Lagarde.
Indicators of consumer confidence are strengthening, suggesting a strong rebound in private consumption in the period ahead. Business investment shows resilience despite weaker corporate balance sheets and the still uncertain economic outlook.
Sources tell Bloomberg United Airlines Holdings is in advanced talks for a large, narrow-body order that would include at least 100 Boeing 737 MAX jets. UAL shares down 1.4%, Boeing up 0.6%. S&P at a record. I'm Charlie Alexander. This is Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic in the Interactive Brokers studio in New York. Carol Massar is off today. Well, Prime Minister Boris Johnson met with President Joe Biden for the first time ahead of the Group of Seven summit that the UK is hosting from Friday. The UK is seeking to project an image of rejuvenated status after leaving the European Union, though there are plenty of tensions over its post-Brexit trading arrangements for Northern Ireland that could bubble over. Joining us now from Cornwall, England, is Guy Johnson, an anchor for Bloomberg Television. Guy, it's great to speak with you again. I know you have been at this all day. I really appreciate your time. Give us the latest from Cornwall. How did the meeting with President Biden and Prime Minister Johnson go?
Interface goes surprisingly well, Tim. As we know, there has been some concern that this meeting may not go well because of the tensions that are existing in Northern Ireland. Joe Biden, the President of the United States, takes his heritage, Irish heritage, very seriously. But it did seem to go tremendously well. The President's wife, the First Lady, wearing a love jumper. It said love on it, the implication being this was a relationship that could be reborn. And what they signed today was a new Atlantic Charter. The first one was signed in 1941 between FDR and Winston Churchill. The idea was that democracies would push back against autocracies, totalitarian rule. At that time, Nazis. Now we're dealing with what is happening in Russia and China. And Joe Biden's basically here. He's on a tour of Europe to basically pull these democracies together, starting with the UK, but including, obviously, a meeting at NATO and with the EU before he meets Vladimir Putin later on next week.
Yeah, and we'll get to Putin in just a minute, but I wonder, ahead of that meeting with Putin, how will Biden be able to essentially bring back longstanding allies that perhaps may have felt alienated in the last 4 years during the Trump administration?
Well, I think so. The relationship with European leaders, certainly Angela Merkel, I think is going to be his biggest challenge, and Emmanuel Macron as well, the French president. There is concern that while things have changed in Washington, they haven't changed completely, and certainly European leaders have been upset and felt wrong-footed by the Biden administration. For instance, its unilateral decision to waive vaccine waivers, to waive vaccine patients certainly caught a lot of European leaders on the hop. So there's still a concern that maybe actually the relationship isn't fully fixed. Europe wants to also have a bigger footprint as well. It doesn't necessarily want to be a taker of U.S. policy. It wants to be a dictator maybe of policy of the group. It wants to have a bigger influence. So it'll be interesting to see how that relationship develops.
You mentioned China, you mentioned Russia. Also on the agenda is climate change. Talk to us a little bit about what you expect to hear and potentially what you expect to actually conclude when it comes to the discussions of climate change from these G7 leaders.
So I think climate change could be one area actually where there could be some common ground. And I think this will be fascinating to see tomorrow, because this is one area in which actually I think European and US policy is largely aligned. And as a result of which, I think they will find it much easier to have a policy which they can all agree to. So I think that could be an area in which we could certainly see concrete progress tomorrow. There's already some discussions about a coordinated response in, for instance, the dates in which internal combustion engines should be banned from sale, diesel and gasoline cars.
I wonder about the specter of the coronavirus hanging over this meeting. We did learn that Chancellor Merkel will attend despite COVID cases. That's according to the UK. To what extent will that dominate not just the recovery discussion, but also the origins of the coronavirus?
So what happened there was some concerns around the fact that some of her security detail may have had issues with COVID testing, and that doesn't look like it's going to be a major impediment. Angela Merkel will still be here. It'll be her last summit, her swan song, so I would imagine she's pretty determined not to miss it. And also we have three major European leaders coming, and I think the Europeans want to kind of leverage that as to the max that they can. Got Mario Draghi coming, got Emmanuel Macron coming, and you've got Angela Merkel coming.
I do want to... Oh, yeah, go ahead. No, please go ahead.
No, so as a result of which, I think the Europeans are very determined to show a very strong sort of show of force here. And we'll see them arriving at around 11 o'clock tomorrow.
Speaking of the coronavirus, we are getting a headline right now that the U.S. has halted J&J COVID vaccine shipments due to a surplus. That coming from Dow Jones. Here in the United States, authorities are working to get as many people vaccinated. And right now what they are reporting is that they are having trouble finding enough people to give those doses to. Guy, it's a completely different story, though, playing out in the rest of the world. And it speaks to the donation that President Biden announced earlier.
And again, this is something that I think the Europeans and the US need to get on the same page with. And there was a major announcement from the UK today. There's a major announcement from the United States. And I think this sort of fulfills a number of different policies. The first one is that it gives the Europeans and the US the kind of humanitarian aspect which they can pursue. Also, Tim, there is this concern that if China, if they don't do this, China will step up. And that's a diplomatic blunder that I think the G7 really want to avoid. And then there's a third aspect of this, which is, and it relates back to the climate story, that many poorer countries are basically saying, look, you won't help us with vaccines. Why should we help you with our climate pledges, with your climate pledges?
Look, it's...
So Boris...
Yeah, it's a really good
Boris
point.
Johnson's really keen to make that happen, particularly as the UK is going to be hosting the COP summit later on this year. So there's a bit of a quid pro quo going on in terms of vaccine distribution and also the climate narrative.
Hey, Guy, just in the last 30 seconds that we have with you, take us to a few days from now when the president is set to meet with Russian President Vladimir Putin. What are you watching for?
I think it'll be interesting to see exactly how tense that meeting is. Joe Biden's basically choreographing this whole thing in terms of his setup to that. He wants to go in there with a very sort of strong narrative. To a certain extent, he is delivering for Vladimir Putin what he wants. Vladimir Putin wants to be seen, wants Russia to be seen on the global stage as a global player, and this is going to effectively deliver that. But on the other hand, Joe Biden being quite canny here in the basically simply just meeting with Vladimir Putin and pushing back, maybe take some of the steam out of that, and maybe we don't get some of the actions that we've seen by the Russian administration to try and basically big up their position.
Guy Johnson, we're going to have to leave it there. Guy's an anchor for Bloomberg Television, joins us from Cornwall, England, with the latest from the G7. In the meantime, let's get a check of world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. Saying that he knows most the path to recovery is to vaccinate people. President Biden says the U.S. is donating 500 million doses of Pfizer's COVID-19 vaccine to nations in need beginning in August.
The United States is providing these 500,000 doses with no strings attached. Let me say it again, with no strings attached.
Biden has accused Russia and China of using vaccines as leverage in their foreign policy. Biden is in the UK, where he met earlier with British Prime Minister Boris Johnson. While the World Health Organization's Europe director is warning that the highly transmissible COVID-19 Delta variant, first identified in India, is poised to take hold in the region. WHO's Dr. Hans Kluge says the threat is looming just as many countries prepare to ease restrictions and allow more social gatherings and travel. He says the variant has shown signs of being able to evade some vaccines and warned many vulnerable populations, those especially over the age of 60, remain unprotected. Well, in another sign, things are returning to normal in the U.S. New York City Mayor Bill de Blasio says Macy's is bringing back fireworks for the 4th of July.
They are bringing back the full-scale fireworks show as we have loved it for decades and decades, back to New York City for all of us to enjoy.
De Blasio says they'll set aside separate viewing areas for people who are not vaccinated. The Associated Press is reporting on a proposal to expand the college football playoff from 4 to 12 teams, with 6 spots reserved for the highest-ranked conference champions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thanks so much for that, Nancy Lyons. Bloomberg Business Week. Tim Stanovic here, coming at you from the Bloomberg Interactive Brokers studios in New York. I'm joined now by Charlie Pellet. Charlie, a big question that many people who are cryptocurrency backers have is, to what extent can they think about support or regulation, I think more so, from the U.S. government?
Yeah, interesting question, though. But as we pose the question, indeed, looking at the story on the Bloomberg by R. Ben Bain and Robert Schmidt, the headline says, Crypto's image takes a beating in Washington, dimming fans' hopes. That's the headline. However, right now, looking at Bitcoin up by 0.4%. So on the one hand, lots of questions about what will happen to virtual tokens in coming months. On the other hand, demand for Bitcoin keeps on going.
Yeah, so just a few months ago, crypto enthusiasts were hoping that Washington was warming to digital assets, but cyber attacks that have demanded Bitcoin ransoms, wild trading, and rebukes from regulators have eroded their optimism. The timing, Ben Bain and Robert Schmidt write, could not be worse. Policymakers are poised to make a number of critical rulings on virtual tokens in the coming months, Charlie, decisions that may reveal how deep of a hole the industry has to climb out of.
And indeed, maybe you caught Joe Weisenthal's interview last night with Massachusetts Senator Elizabeth Warren. Here's what she had to say.
What's happening right now in cryptocurrency, like Bitcoin and Dogecoin, it's a wild west out there. And it makes it not a good way to buy and sell things, and not a good investment, and an environmental disaster. So do we need some regulation around this? You bet we do.
And indeed, especially important given the environment for what may happen or not happen with crypto mutual funds, and also potential banking licenses to financial firms.
That's the big question, and not a good sign when you have Elizabeth Warren saying, if you are supportive of crypto, that it needs to be reined in, that it's the Wild West, and especially in the context of these recent hacking attacks that have demanded Bitcoin as a ransom. We're speaking, of course, of Colonial Pipeline and JBS, the meat giant that's responsible for more than 20% of the meat here in the United States. This is Bloomberg Business Week, and this is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. We've got the Dow, the S&P, Nasdaq all higher. Nasdaq 100 index up 1%. Russell 2000, Dow Transports on the minus side. Bottom line here, could see a record close on the S&P. Let's head right over to the first word breaking news desk. Lots going on with today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading higher today in somewhat quiet trade. Dow's currently up 63 points. S&Ps are higher by 20. Nasdaq rises by 103. The U.S. 10-year yield drops to 1.46%. Gold is up 7. Transports declined by 83 points. And among the main 11 S&P sectors, healthcare and real estate led, while financials and industrials were under pressure. Leaders to the upside in the Dow, Walgreens and Merck, while Caterpillar led to the downside. And in other news, the U.S. halted J&J's COVID vaccine shipments due to a surplus. Amazon wants office employees back in the office 3 days a week. McConnell says he hasn't given up hope on an infrastructure bill, and GameStop falls 29%. In deal news, Intel is said to have offered more than $2 billion for chip designer C5. And wrapping things up, Chewy reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, thank you very much, Bill. And you're live breaking news over at your Bloomberg Time Squad. SQUAWK on your terminal. I'm Charlie Pellet. This is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, in the Fomo economy, everyone is making money but you. Whether you're into meme stocks, crypto, or real estate, buying seems driven by as much by anxiety, by hope. Even professional investors who know better can't resist getting in on the action. It's the cover story for the international cover of the new issue of Bloomberg Business Week magazine, and you can read it at bloomberg.com/businessweek. Joining me now from Paris is Lionel Laurent, columnist at Bloomberg Opinion. Lionel, it's so great to have you back with us. What is the FOMO economy?
So essentially, obviously, the ingredient is the fear of missing out.
Yes.
Psychological belief that we are missing out on something. Everyone's getting wealthy apart from us. It is no longer just bankers and executives. They're able to, if they have a company, they're able to list it at a huge valuation with no revenue, and that is rippling out as their advisors, who are supposed to be the experts, who have studied hard and worked hard to tell people how to run businesses, are now completely at a loss as to explain what works, what is the business model that works, and how do you make money. So the result is that everyone is dancing to the same tune, and it's all about the stories that we tell each other. I'm getting rich. How are you getting rich? Let's all trade. So it's a kind of weird contagion that's happening with a lot of different ingredients, and it's sweeping the world economy.
Yeah, those ingredients include cryptocurrency. It's the way you open your piece. It also includes meme stocks such as AMC, GameStop, Wendy's, GEO Group. The list goes on depending on the day. And then also even housing. I mean, reading through this story, this column, I was thinking to myself, this sounds exactly like conversations that I've been having with my friends over the last few months when they say, hey, should I buy Bitcoin? Should I get in on meme stocks? And what is going on with the housing market? Of course, I can't offer them any advice, and I have no idea what's going to happen. But what do you find about what's going to happen if there are signs of any sort of asset bubbles here that have been similar to asset bubbles in times past?
So there's a couple of things happening on housing. I think it really is that kind of anxiety that says, I am always going to miss out on housing. Every time there is a supposed opportunity, the prices keep going up. And if I don't buy now, I will be priced out. There is anxiety. There is greed as well. In New Zealand, of all countries, there are people who already own homes, one or two, who are now buying 3, 4, 5. There is just this need to keep accumulating because it is seen as a bet that can only work out in the long run. Remember that young people as well, coming into the job market, they see only a long future ahead of them. They're not convinced at all that if they study and work hard, they will get any kind of normal retirement. So they are swept along too. And housing is the most basic need, a roof over your head. It's what we all dream of in retirement. So all of these things are being compressed in a world of low rates and excess savings and post-reopening euphoria. It is affecting everything, and housing is definitely part of it.
How does it end?
Very good question. So there's a couple of possibilities, right? I mean, use the word bubble. I see what's happening now as more of a cycle. So we've seen gold rushes in the past. We've seen dot-com booms. These things can have a long time lag before they change. Some people think there is a genuine turn in for example, the inflation cycle. If yields start to rise, then all these moonshot investments don't start to look so great in the same uniform way. Otherwise, I'm afraid it really has to be a question of trying to find that middle ground between the really extreme stories of getting rich and maybe the stories that seem boring today. Like if I said to you, just put a little money aside every month and put it in a mutual fund, you may have to reassess, think yourself about your own life and think, well, if I build my entire life around FOMO, just how sustainable that is. So I would say it's a mix of natural cycles, the growth of the economy and how it performs, sort of fundamentals, but also human psychology. Just how contagious are those stories going to be?
Yeah, and as you point out, which I love in your piece, you say, incidentally, actual lottery tickets have also grown in popularity during this time. I wonder about wealth management, because it's something that you touch on. The experts, the advisors, the people who used to march into boardrooms and know exactly how a company should spend their money, they don't necessarily have all the answers like they used to.
No, and this is why it is an economic phenomenon, because it is touching all of these industries that sort of might have been seen to be permanent or immutable or long term. And this is why it was so interesting to write this story, because you're speaking to professionals. You're not speaking to day traders. You're not speaking to the retail crowd. You're speaking to people who have qualifications and who are supposed to know what to say. And all they can say is, well, just wait and see. The cycle may turn. Try and build a constructive portfolio. But you just have, again, on the FOMO front, you do not want to appear dumb in front of your client. And that, I'm afraid, is what a lot of these advisors are worried they are looking like today, which is dumb in front of this reality of the market.
Just in 10 seconds, advice if you have FOMO.
Try and find something else to balance it, however you can.
Maybe get outside and go for a run, although that could cause you to think about what you're missing out on. Lionel Laurent is columnist at Bloomberg Opinion, joining us on the phone from Paris. Lionel's story is the international cover of the new issue of Bloomberg Businessweek magazine. You can read it at bloomberg.com/businessweek. We got much more Bloomberg coming up in just a few minutes. This is Bloomberg Businessweek Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, we are under a half hour until the close of the trading day on this Thursday, June 10th. In just a few minutes, it is that time for Dave Wilson, stocks editor, his chart of the day, and of course, his song of the day. What's it going to be? The chart has to do with gold, the gold kind and the black kind. Little preview there. In the meantime, let's get a check on the trading day with Charlie Pellet.
Thank you very much. Maybe the sun will be not fade away because right now we're looking at the S&P at 42.38. The record there, 42.32. 28 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all higher from now. The big question, though, will we see a record close on the S&P? Keep it locked into Bloomberg Radio for the latest, and of course, how Asian markets continue to react tonight. S&P up by 0.5%. The Dow right now up by 35 points, up 0.1%. NASDAQ up 98, higher by 0.7%. The Dow, the S&P, NASDAQ 100 index all higher. NASDAQ 100 index up 0.9%. The Russell 2000 Dow Transports both on the minus side. Equities rallying towards records. Benchmark Treasury yields extending declines to the lowest since March as investors bet that the Fed will maintain its ultra-accommodative policies even after data showed consumer prices rose more than forecast last month. 10-year yield 1.44%. Gold up 0.5%, 18.97 the ounce. Bitcoin up 0.3%, 36,520 right now on Bitcoin. And West Texas Intermediate crude 70.19 a barrel, up by 0.3%. U.S. government has halted new shipments of Johnson & Johnson's COVID-19 vaccine as federal agencies take steps that could help clear a surplus of unused doses. This according to Dow Jones. Johnson & Johnson shares up now by 0.9%. President Biden announcing today that the U.S. will begin shipping 500 million donated doses of Pfizer's coronavirus vaccines to countries, quote, in dire need in August, making good on a promise to lead the global campaign against the pandemic. Dr. Jennifer Nuzzo is senior scholar at the Johns Hopkins Bloomberg School of Public Health.
I was really heartened to hear yesterday President Biden suggest that the plans to purchase additional doses, staggering number of doses, still, a drop in the bucket in terms of what we need globally, but really one of the largest potential pledges of vaccines to date. Really important, and frankly, it is, in our selfish best interest to do this.
And Dr. Nuzzo, of course, with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, checking the vaccine stocks. Pfizer up by 2%. Its German partner BioNTech, the ADR is down 0.6%. AstraZeneca shares ADR is up 2.2%. Moderna down 0.4%. J&J up 0.9%. Recapping, S&P at a record, up 17, up 0.4. I'm Charlie. How about that? Is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Attracts a crowd like a crowd.
I know it.
I kind of thought you might.
I know it. Dave, you're going to love this. This is Soul Asylum from the album Grave Dancers Union. And the song is called Black Gold?
Yes.
Okay, I got a story to tell you.
Okay.
When I turned, what did I turn? Maybe 10 or 11 years old, I got a CD player for my birthday. It was the early 1990s. That was the first album that I bought.
Whoa. That's saying something. You want to know the first two albums I ever bought?
Yeah, I do.
Well, one, for some reason, was an album of Sousa marches, John Philip Sousa. I have no idea to this day why I did it. But the other one was the first album by the Monkees.
I love it.
Who, by the way, what's left of them, they're getting ready to do their final tour.
You never forget your first album, and I have to tell you, it was Runaway Train was the song that I wanted. And
that was the big hit, yeah.
It was the big hit, but the album, it holds up, and that is a good album.
Well, there you go.
Wow.
So we move on to Why Black Gold. Yes,
I can't talk
indeed.
about the early 1990s anymore.
You kind of set it up, Tim, talking about the relationship between oil and gold, and it's something that Tavis McCourt touched on. He's a strategist over at Raymond James. He had this analysis of energy and mining stocks. And I'm quoting from the headline of his research. As the world debates whether inflation is transitory. Obviously, that was before the consumer price report came out today, which may have, at least to some extent, settled that debate for a few people here and there. But in any case, the chart that got me was just looking at the relationship between oil and gold. Now, he kind of had it as a gold-oil ratio. I turned it on its head because, in his view, oil's still cheap in relative terms. Even though, you go back 6 months or so, it's double what it was, if you were to just look at, say, the price of West Texas Intermediate crude. So, that's the relationship. The chart's weekly, so you don't see the one point where the ratio turned negative when we had those below zero crude oil prices in the futures market last year. So it kind of smoothed that out a bit. In any case, you look back all the way to 1983, and that's the period that McCourt was looking at. You can see that at least if you're kind of comparing these two sort of, foundational type commodities, you might say, oil's still not anything near expensive. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
What's typically the relationship between oil prices and gold prices?
Well, it's kind of all over the map, and that's what you get a sense of from the chart. You go back to 2008, when it peaked, and then you look last year, you're talking about a drop of 94% in that ratio. Now, it's made back roughly a quarter of what it lost over that time frame, roughly 12 years. So, it does vary quite a bit over time, no question.
Well, Dave, give us a preview in the last minute that we have together of your stock of the day.
Lakeland Industries. It's a company that makes protective equipment for business. And as you can imagine, last year, their business was going gangbusters because of the coronavirus pandemic. Not so much anymore. They came out with fiscal first quarter results. Earnings down 46%, revenue down 25%, and among other things, they talked about how inventories are building because there just isn't the demand as we all get vaccinated and the pandemic starts to fade. The shares fell to their lowest price of the year after the results, and they're down about 12% at the moment. The ticker, by the way, Lake. L-A-K-E, as in Lakeland.
Yeah, down 14.6%, as you mentioned, Dave. Talk about base effects, right? That's a tough comparison.
Well, it is. You see, and it's true for a whole lot of companies, that kind of had a surge in demand, and then, things got better, and the demand peeled away. We saw it with Campbell Soup the other day with their results. Yeah.
People aren't buying soup the way they were last year. Well, look for Dave's stock of the day just after 4:15 p.m. Wall Street time. It's on Facebook, it's on LinkedIn, and it's on Twitter @TheOneDave. Dave Wilson is stocks editor here at Bloomberg News. Well, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nancy.
Hey there, Tim. President Joe Biden says it is in every country's interest to make vaccinations widely available to everyone. He says the U.S. will set the example, sending donated Pfizer vaccines to nations beginning in August. He made the announcement while in the U.K. The U.S. is donating 500 million doses to help speed the pandemic's end.
The United States will purchase 500 million doses of Pfizer's COVID-19 vaccine to donate to nearly 100 nations that are in dire need in the fight against this pandemic.
Biden says the donation comes with no strings attached. The director of the Federal Bureau of Investigation, Christopher Wray, faced questions from the House Judiciary Committee, which drafted the articles of impeachment against President Trump. Bloomberg's Irv Chapman reports.
Democrats said the FBI should be investigating Donald Trump's incitement and the intelligence available before the U.S. Capitol was attacked.
We are just as outraged by what happened on January 6th and just as determined to do our part to make sure that never happens again. you can be darn sure that we are going to be looking hard at how we can do better, how we can do more, how we can do things differently in terms of collecting, analyzing, and disseminating intelligence.
Democrats also brought up hate crime. Republicans focused on the Mexican border as an entry point for terrorists. In Washington, Irv Chapman, Bloomberg Radio.
Autopsy results show Andrew Brown Jr. was killed by a gunshot to the back of his head by police in North Carolina. The state's findings match up with an independent report arranged by the family. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that, Nancy. Tim Stenovec in the Bloomberg Interactive Brokers studio in New York. I'm joined now by Charlie Pellet. Charlie, interest rates. It is among the most important things when it comes to bond markets and equity markets, of course, and the broader economy. It's why we pay so much attention to the Federal Reserve. Alexandra Harris has a news story out on the Bloomberg that says that the Fed may tinker with rates for, quote, broader market reasons. That's according to J.P. Morgan.
Indeed, her story citing J.P. Morgan strategist Teresa Ho, Alex Rover, and Ryan Lessing. And they say that while the Fed's reverse repo facility has been, quote, pretty effective as a floor for repo rates, almost the entire $13 trillion money market universe now trading inside 10 basis points with a substantial part at or near zero.
Here's what they write in the note, quote, without a technical adjustment, it's fair to wonder how long this current arrangement with the MMFs can continue. At what point does zero become an unworkable business plan for at least some of the asset managers running the MMFs?
Indeed, concerns about money market funds enacting soft closings are surfacing again. So the issue is what happens if neither money markets nor the banks want the money. Shareholders might decide to reallocate their cash out of the curve or perhaps into riskier asset classes.
Those shareholders without access to money funds and the RRP may have to, quote, aggressively bid for assets directly in order to stay invested. That weakens the RRP rate as a floor. Latest money market fund holdings, Charlie, data as of the end of May showed that taxable money markets allocated $460 billion to the RRP, compromising the, quote, vast majority of the $480 billion total uptake.
And indeed, all of this against the backdrop of that hotter-than-expected CPI report out this morning. Consumer prices climbing 0.6%, second largest advance in more than a decade. Obviously, markets paying close attention to that today. The Dow, the S&P, Nasdaq, all higher. 10-year yield, as we wrap things up here now, 1.45%.
Yeah, markets certainly, at least in the bond market and equity market, certainly shrugging off those concerns about long-lasting inflation. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Headline from the Bloomberg Professional Service, the Chinese ride-hailing company Didi filing for an IPO. S&P right now up 16, 42.36. Keep in mind, 42.32 is the record. The S&P up right now by 0.4%. Nasdaq higher by 90 points, up by 0.7%. Nasdaq 100 index up right now by 0.9%. Both the Russell 2000. Now transfers are on the minus side. Equities climbing towards records. Benchmark Treasury yields extending declines to the lowest since March as investors bet that the Fed will maintain its ultra-accommodative policies even after data showed consumer prices rose more than forecast last month. Again, the S&P up 17 now, up 0.4%, is at a record right now. 10-year yield 1.44%. Gold up 0.5%, 18.97 the ounce. West Texas Intermediate crude holding above $70 a barrel. 70.15 right now, up 0.3%. I'm Charlie Pelletan. It's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's the Drive to the Close. We are just a little over 10 minutes away from the close of equity markets here on this Thursday, June 10th. Joining us now is Hillary Kramer, President and Chief Investment Officer at A&G Capital Research. She's also the author of Game Changer Investing, How to Profit from Tomorrow's Billion-Dollar Trends. She joins us on the phone from Florida. Hillary, it's great to have you back with us. How are you?
Tim, I'm very good. It's really exciting that COVID seems to be behind us here in Florida. Let's just hope that Delta variant doesn't hit.
Yeah, look, I hear you. And it certainly is a different story playing out in the rest of the world, but we are starting to feel a lot different here in New York as well. Hillary, I want to start just by talking about inflation, and then I do want to get to the many stocks that you want to talk about. But we can't ignore the CPI data that we got earlier today, and I find it just fascinating that both the equity market and the bond market really shrugging off the idea that this could be permanent inflation.
The market was up simply because of that, because the stock market loved it. The bond market, as you say, Tim, really didn't freak out. It just, felt like that was normal. It was priced in. But I think that there's been some second thoughts because here later in the day, industrials, materials, financials started to lag. So this may start to register, and the wage inflation is a significant problem for the margins on so many companies. We may see some major rotations. Companies like Walmart, which are great portfolio staples, but have 1% razor-thin margins, as long as they're paying people $17 an hour to stack shelves, which I think is great because people should make money and shouldn't be working and like starving and making ends meet.
Of course.
But it's going to impact the stock price because the earnings are going to be impacted. And it's just a tough time in the stock market to find good opportunities.
Well, where are you finding some of those good opportunities, Hillary? I want to talk and just start with Chewy because they're reporting after the bell today.
Chewy is a great company. It had its year. I was on top of Chewy starting at $23. And the stock now at one point above 100, and we could see a big jump today upwards. Chewy's still doing great. The humanization of pets. There's been losses. We're not going to see an earnings per share positive until the fourth quarter of this year, and it's very similar to Etsy. The story, rotates. Suddenly now, then the story becomes, especially on the Reddit trade, the stocks like the Etsy's and the Chewy's have been tossed aside. But I'm finding opportunities, I'm trying to find small caps, but that are value plays. We found one company, Tenant, who's done a lot of work on TNC. It's scrubbers, but scrubbers for the floor, not for the internet. Someone thought it was for the internet. Scrubbers, vacuums, these massive $60,000 pieces of equipment for arenas and stadiums and Walmart and Costco and Sam's Club, and Tenant sells replacement parts. Been around for over 100 years, 1.1% dividend yield. And what I'm waiting for is a $1.1 billion company. Some middle market private equity fund is going to start buying this thing up and will probably take it out, because that's what they're all looking for. Everyone's searching for any opportunity where, and at this point, if they can make a double, and there's so many private equity spin-off funds where to some funds, this might be nothing, 1.1 billion, to another, it might be, the king's feast.
Yeah.
And
look, Hillary, you make a really good point, because I did see, and I mentioned this before, I saw a tweet in recent weeks that said it's a really good time to be selling something because there is so much money out there. I'm wondering, though, what that tells you about where we are potentially in the market cycle.
We're overstretched. We are, as long as the Fed doesn't, start to do what they need to do to control inflation, raising rates, we're going to be fine. But there's going to be a tipping point, something, and we never know what it is, but we know it's coming. It's going to bring this market down, and there's so many traders on margin out there. There's so many individual retail traders. We could see like a mass exodus and some trampling that could be really bad. So everyone should keep their powder dry and get ready for the market to go down and look at it as a buying opportunity.
When is a realistic? Look, nobody has a crystal ball. If anyone did, that would be game changing. But what is a realistic timeline that you're thinking of one of these downturns where you could take advantage of that dry powder?
It could happen when tax legislation actually is enacted. That could be the major tipping point that starts some funds or some people selling. It could be something geopolitical, or as we started this conversation, it could be this Delta variant that's closing down 1/3 of the ports in China, and which we're going to see more of a holdup in semiconductors and all sorts of exports, which are going to make equipment and manufacturing a lot more difficult to fulfill. But I still think that, again, Tim, there are opportunities. Like in biotech, for example, ASCO, which is the big oncology meeting that happens once a year, was last week virtual. And ASCO had some really incredible oncology news that came out of it. And oncology has really been, the oncology biotech stocks have relatively been ignored. The one that came out that's the biggest favorite is Iovance, IOVA, that had some really solid data on melanoma, immunotherapy, and there finally could be true, large-scale applicability instead of chemotherapy to do this, turning cells against the bad cells and your body fighting your own war. But we think Iovance, actually Goldman Sachs says it's going to be more than 350% increase in the next 12 months. Now, for an analyst to say that, there's got to be some real conviction around it. But the stock, in the 20s has been over $100 a share, and that's the way biotech can go. But eyes are going to go off of, away from the vaccine stocks. Another one, Optimize RX, OPRX. That's one.
Right.
That's the one that sends the messages for pharmaceuticals and prescriptions.
Hillary, we only have a couple minutes left, so I wanted to make sure to touch on fintech because it's a category that is incredibly hot right now. I feel like I'm seeing ads for fintech companies that I've never even heard of that have multi-billion-dollar valuations, at least by venture capitalists. Where are you seeing the opportunities with publicly traded companies?
Fintech, the best way to go would be keep it simple. Don't go into any complexity. You're better off with the PayPals of the world and let them enter into the fintech arena. They have Zoom, they have Venmo, they have the power. $315 billion market cap, PYPL, and continuing to grow. Fintech is just a word that everybody's chasing after. In many ways, I think fintech is no different than Google already has. The Google suite and people able to make changes on a document on the Google system. So in many ways, it's overrated. Look at how fast everyone was able to adjust when we had only a few days to close down states and the entire country. And we didn't need these fintech companies to do it.
Hillary Kramer is the president and chief investment officer at A&G Capital Research. She's also the author of Game Changer Investing, How to Profit from Tomorrow's Billion-Dollar Trends. She joins us on the phone from Florida. Hillary, thank you so much for joining us again. It is always great to have you on the show. Well, we are just a couple of minutes away from the close of equity markets today. Right now, the Dow is pretty much flat, higher by close to 12 points. The S&P 500 off its earlier highs, as is the Dow. S&P higher by just about 20 points. The Nasdaq higher by more than 0.8%. And coming up next, it's Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close with my colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell and here to help take us beyond that bell. We're joined right now by Tim Stanovic, Carol Masters stuck in Margaritaville, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the crucial moments of the day. And Tim, it looks like right now, at the moment, the S&P 500 clinging to a record high.
Clinging to it. We'll see if it can eke it out just in the last couple of seconds of trading. Hey, the inflation story is the story today, guys, and it does seem that at least in the bond market and the equity market, investors are really shrugging off the idea that the CPI numbers that we got earlier today, which were a hotter than expected print, is something that is permanent, is something that is not transitory. And they are actually trusting the Fed when it comes to this, Taylor.
Yeah, Tim, I mean, you took the words right out of my mouth. I think what was so surprising, Caroline, is we woke up this morning and yields were rising higher, 3-4 basis points, and all of that has turned around. And I think Steve Whiting really summed it up well, is we didn't all just wake up Monday and decided we wanted long duration assets, but well, maybe the shorts might want to come in now on this treasuries and get back yields here to 150, but what are we at, a 147? I mean, just unbelievable.
We're actually, maybe we can put that back up on the board here, because it looks like we're getting a little bit of a bid here in the treasuries as we move closer to the close here. Now 144 on your 10-year yield here. Wow. So, of course, we are keeping an eye here on the equity market, but as we get towards the close of equities, a lot of action right now in the treasury market, guys.
Yeah, and that's really what's been sort of flipping about. The dollar had moved back to where it was post that initial knee-jerk reaction of 8:30 a.m. inflation, but transitory is mandatory. We all want a margarita to drink to the amount the inflation is currently. On the higher side, we don't worry too much.
Yeah, that's right. All right, we are getting the closing bells. We're going to get back to what's going on in the treasury market in a second. But for the equity market right now, 42.39, 26 and change. That's up 0.4% on the S&P 500. Waiting for those numbers to settle, but pretty much that's going to be a record high on the day for the S&P 500. Nasdaq still off from its record high, but going to finish the day up about 0.8%. Dow Jones Industrial Average 34,467. That's up fractionally on the day, less than 0.1%. The Russell 2000. That's actually your laggard on the day. It had been flirting with a record high coming into this week, but now going in the opposite direction. 23.11 right now. That's down 0.7%, basically about 15-16 points.
And we know so much of that sort of small cap reflationary, inflationary trade is what was driving a lot of those domestically focused companies. And while all of that has really unwound, Romaine, as you mentioned, we're down to 144 on the 10-year. And so you're sort of getting that defensive theme when we talk about the sectors. A lot of it is tech, it's software, it's services, it's semiconductor equipment, it's real estate. For radio audience, we're up anywhere from 1 to 2.5%, 2.25% really on some of the classic bond proxies that we've been following. To the downside, well, you could have guessed it, it's banks and it's dividend yielding sectors. As we know that when yields fall, Romaine, some of those banking sectors don't always outperform.
All right, a quick check here of some of the gainers on the day. Biogen getting a nice little pop today. Of course, it's up now well over 40% here on a weekly basis. Interesting, we saw a bid come into some of those consumer staples here, including Kroger. Some of this actually has to be because of those inflation numbers and, of course, the higher food prices in there. Speculation that might actually benefit some of these companies. One of the biggest changes in volume that we saw on the day, RH, that's called Restoration Hardware. At least that's what it used to be called. You know, that gigantic furniture that you put in your mansion overlooking the Palisades there. Up 16% there, having a great day. And we had 3 IPOs today, 3 debuts here on the market, Monday.com, Dibs, and on your screen right now, we're taking a look at LFST. And of course, this is the mental health company backed by TPG, coming to market today, having a pretty decent day, up about 22%.
Oh, you got the gainers, Romaine. I got the decliners, starting with GameStop, among the original meme stocks. I think the original meme stock, dropping 27% at the close. That's the most since March 24th. But the company's stock still higher by around 1,000% this year. Investors are still waiting on that clear vision coming from Chewy founder Ryan Cohen about what that strategy looks like. Of course, we talked yesterday about the new hires coming from Amazon. So certainly, I think to a lot of investors, it's moving in the right direction, but perhaps they want to see more of a clear strategy. Electronic Arts down fractionally. It was down as much as 2.4% earlier in the day. This was after Vice's motherboard reported that hackers stole game source code and related internal tools. I'm also keeping an eye on Cheesecake Factory today, guys, down more than 7%, Caroline. And the software company Zeta Global started trading on the New York Stock Exchange today, finishing the day down around 11%, Caroline.
Down 11%. Tell you what was also down, just fractionally by about 0.1%. If we go cross-asset, was the US dollar for our radio audience. You can't see there. I'm going into the global macro movers. If you happen to be lucky enough to own a Bloomberg terminal, you can check in on where did well in FX, where did well against the US dollar. Commodity-related pairs. We're seeing the likes of the Aussie dollar up 0.3% on the day. That's as we see the Bloomberg Commodity Index actually hit the highest once again since 2015 on the commodities vertical that I'm looking at. Steel up 2%. We also saw a bid overall for iron ore up 0.8%. So still that desire to get into infrastructure, the funding that we're going to see in there, the desire to get into metals, even though China's been doing its best to cool some of this commodities higher. And I'll end on sovereign bonds. Taylor, I'm going to let you take it out on the United States, but this is a global move. We had global stocks at record highs, and we had global yields pushing lower across the board. Remember, it was ECB day today as well.
Unbelievable, Caroline, the moves that we're seeing within the U.S. Treasury market right up to the closing bell. I was taking a look at the 10-year now, the lowest going back since March 2nd. Yeah. The 30-year yield, the lowest since February of this year. So you're getting some big moves. We're down more than 5 basis points to a 143.85. And I'm going to turn it here to you guys, Romaine. I mean, I was reading yesterday in terms of some of the technicals. B of A strategists were saying corporate pension plans were fully funded. So at this point, when you're looking at equities at a record high, how do you think about shifting some of that allocation into the bond market? But to do it all this week is fascinating.
And you have to really start thinking about here what message is being sent here. You look at that 143 that we're hitting now on that 10-year yield. At some point, you guys also got to put up the 10-year real yield right now, which continues to slide deeper into negative territory. This is a market now, Taylor and Caroline, that I would think now has to be looking back more towards that duration trade. The idea here that the Fed, they really aren't going anywhere for quite some time. At least that's the belief.
You have a negative real yield, Caroline, 94 basis points. We woke up this morning, was it a week ago? We were at 78 or something. Then we're at 90 this morning and now 94 basis points, Caroline. Sorry to cut you off.
No, I think that this is this the bond market backing up the Federal Reserve? Is this the bond market drinking in that is this transitory and money can go in? Or is it technicals at play, Tim? Is it, why are we seeing such originally short positioning in the US Treasury market and that all was sort of being unwound to a certain degree? But for whatever the case, we are not worrying about the transitory effects of course, inflation in the United States. We're not worried about that inflation print. And many were saying, actually, the ECB earlier today, the fact that they're still going all thrust into stimulus is helping U.S. bonds too. Well,
yeah, Caroline, look, I think that's obviously the big question here. And this print was hot, and it came in higher than expected. And it's worth repeating some of those numbers. For month-over-month CPI coming in at 0.6% versus 0.5%. And then year-over-year, 5% versus 4.7% surveyed. And I think part of the story has to do with looking under the hood and actually seeing specifically what was more expensive. And it's those categories that are affected by a chip shortage, for example, rental car prices. It's those categories that, at least on a year-over-year basis, if we weren't doing anything last year, we weren't going out to dinner, we weren't flying on airplanes, the base effect is going to be there. And look, a lot of this seems to be priced in.
All right, so if the base effect, though, right now, if that is the argument, I mean, you go back over to Europe and you look at the commentary that we got out of Lagarde, and more importantly, some of the data. That inflation forecast was interesting because that inflation forecast, that was a declining scale here. You're talking about going from 1.9 in 2021 to 1.5, I think, in 2022, and down to 1.4. A lot of people looked at that and they said, really? But this is the belief. This is the belief coming out of the central banks, whether it's over there in Europe, whether it's over there in Japan, and of course, whether it's over here in the Fed, and the bond market is buying into it.
What's so interesting, I think, guys, is also where are you going? Everything is moving in a correlated nature that we're not used to. Why are you buying bonds and equities at the same time? Where is your protection? Where is your Bitcoin trade, guys? If you're seeing inflation going higher, why on earth are we not seeing inflation?
Where's the hedge? Store value. What is it? Is it store value? Is it a hedge? Is it transactional? I'm confused.
When was the last time
Is it
we
a
saw
commodity?
Bitcoin actually trade flat? This is like I'm wondering if something is actually wrong here.
Well, they're all piling into Treasury still.
I'm still trying to tell Caroline it's not a high-quality liquid asset.
I'm sorry,
on
Tim,
Bitcoin.
real quickly, we got to get this in. Where is Carol Master right now?
What did you repeat that one more time?
Where
Romaine?
is Carol Master?
Oh, Carol's in Margaritaville.
Yeah,
Yeah, exactly.
You know,
doing what?
We did have a great interview with Jimmy Buffett a little earlier in the day. It's talking about all, and we're going to be playing it on. No, we didn't get to go, but I got to see Jimmy Buffett. He was in his element. He had a beer in front of him, even though
He did
it was
have
only
a
around 11
And so
o'clock.
now she's down in Margaritaville.
You know what they say,
You're
right?
stuck back here doing the
You know
work.
what they say?
Okay.
It's 5 o'clock somewhere.
True.
All right, well, I think we're going to play that interview a little bit later.
good.
Right here on Bloomberg Television. Believe it or not, Tim, we do a lot here on the television side. All our radio audience out there, please pull over, turn in your TV sets.
We just need to all be wearing parrots on our head, Tim. I leave you with that.
Well, that's going to do it for our cross-platform coverage on YouTube, on Bloomberg TV, and on Bloomberg Radio. It's called Beyond the Bell, and it will be here same time, same place, this time tomorrow. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Tim Stenovic in the Interactive Brokers Studios in New York. This is Bloomberg Business Week. A little bit about 8 minutes after the close of U.S. equity markets to bring you up to speed. The Dow Jones closing higher by just fractionally, 0.06%, higher by more than 19 points. S&P 500 higher by 19 points as well, just higher than a little more than 0.4%. The Nasdaq finishing the day higher by close to 0.8%, 108 points to the upside. We are still awaiting earnings from Chewy. We will bring those to you live as we get them. Well, coming up a little later in the show, yes, you heard right. You are going to hear from Jimmy Buffett, the legend himself. We caught up with him a little earlier today, focusing on his brand new resort. It costs more than $370 million, and it is right here, smack dab in the middle of New York City. He says it works because Manhattan is an island. Well, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. President Biden is detailing the program in which the U.S. will provide COVID-19 vaccines to the world. He says the donation comes with no strings attached.
These 500 million vaccines will start to be shipped in August, as quickly as they roll off the manufacturing line. 200 million of these doses will be delivered this year, 2021, and 300 million more will be delivered in the first half of 2022.
Biden is in the United Kingdom, where he met earlier today with Prime Minister Boris Johnson. They discussed the pandemic as well as China and climate change. Johnson says the conversations were a breath of fresh air. The wife of Mexican drug kingpin Joaquin El Chapo Guzman has admitted to helping her husband run his multi-billion-dollar criminal empire for years.
Emma Coronel Iceborough is admitting to 3 federal offenses as part of a plea deal with federal prosecutors in Washington. The charges include knowingly and willfully conspiring to distribute heroin, cocaine, marijuana, and methamphetamine for several years. She also pleaded guilty to money laundering conspiracy and engaging in transactions with a foreign narcotics trafficker. The 31-year-old was arrested in February at Dulles International Airport outside Washington and has been behind bars ever since. In Washington, I'm Nathan Hager, Bloomberg Radio.
The official autopsy of the unarmed black man who was fatally shot in April by sheriff's deputies in North Carolina states he died from a penetrating gunshot wound to the head. Andrew Brown Jr. also had a low level of methamphetamine in his bloodstream. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that, Nancy. Tim Stenovic in the Bloomberg Interactive Brokers studio. This is Bloomberg Business Week. I'm joined now by Charlie Pellet. Charlie, taxation. It's obviously not just an issue here in the United States, but also one around the world. The world's richest right now facing a tax bite after 40% run-up in fortunes.
It sounds like one of those numbers of the day that you guys do.
Yeah.
$8.4 trillion. The world's wealthiest 500 individuals, now worth $8.4 trillion. That is up more than 40% in the year and a half since the global pandemic began its devastation. The economy's biggest winners, tech corporations that created many of those vast fortunes, are paying lower tax rates than grocery clerks, networks. Their mega-wealthy founders can exploit legal loopholes to pass huge windfalls onto heirs largely tax-free.
Well,
I just want to credit the reporters on this, Ben Steverman, Laura Davison, and William Harobin.
Well, Charlie, a big part of the discussion during the coronavirus crisis has been the K-shaped recovery and the way that this has affected people in unequal ways. And we've seen this play out on an individual basis, as this article points out, and also as this article points out on the basis of companies. And I think what you're starting to see, look, and the Biden administration has talked about this, President Biden and candidate Biden talked about this, is the idea that the wealthiest corporations and Americans need to start paying what he considers their fair share.
Indeed. And, you know, you've got the super wealthy, the mega wealthy that we're talking about in this story. But, you know, I tell you, for anybody who opened a 401k statement, a 529 statement for your kids' college during the pandemic, an IRA statement during the pandemic, there's not anything to complain about for people opening those statements.
Don't they tell us not to open those and just ignore it, set it and forget it?
Mail comes in, but you never know. Am I going to get dinged for a $10 fee here or there? I want to be on top of it, but that's just me.
Well, I do encourage everybody to go check out this story available at the Bloomberg and at Bloomberg.com, because a group powerful enough to challenge the supremacy of the tech titans is on the verge of taking actions. That's the leaders of the Group of Seven, including President Joe Biden and UK Prime Minister Boris Johnson, who are meeting in the next few days. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
S&P 500 index rises to a record today. Treasuries gained after that hotter-than-anticipated CPI report. S&P up 19 to a record 4239, up by about 0.5%. The Dow up 19, up 0.1%. Nasdaq up 108, up by 0.8%. 10-year yield 1.43%. Gold up 0.5%. 18.98 the ounce, and West Texas Intermediate crude up 0.5%. 18.98 the barrel. Actually, it's gold is up 0.5%. 18.98 on gold. West Texas Intermediate crude up 70.18 a barrel on WTI. So to be clear, we've got gold at 18.98 up 0.5. WTI up 0.3%. 70.18 a barrel. GameStop plunged today, down 27% on that stock sale plan and an unclear strategy view. The Chinese ride-hailing company Didi has filed for an IPO in the U.S. Chewy reported net sales for the first quarter that met the average analyst estimate, down by almost 3%. Dave & Buster's forecast revenue for the second quarter, that guidance beat the average analyst estimate, up by 4%. Recapping S&P at a record up 19, up 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that, Charlie Pellet. Well, Tesla shares right now are down for the year, more than 13.5%. Perhaps the Plaid event, which is scheduled to happen tonight at 7 p.m. Pacific time, could turn those fortunes around for the company's share price, which is off significantly from its all-time highs reached earlier this year. For more on what exactly is going on with Tesla and its share price is Ed Ludlow, auto reporter for Bloomberg News. He joins us from the Bloomberg 960 studio in San Francisco. Ed, it's always great to have you on the show. Let's take a step back here and just talk about where Tesla is right now.
Carl, that's a massive question.
Well, you're the guy to answer it.
Yeah, I mean, the problem with Tesla and its chief executive officer, Elon Musk, is there's always a lot of noise on social media with tweets that come from Elon Musk, a lot of high-profile events like tonight's Plaid event over in Fremont that kind of distract from what the company's trying to do. You know, right now, Tesla is in ramp mode. It's trying to build factories in 2 continents, one in Germany and one in Austin, Texas. It's trying to improve the efficiencies of its Shanghai plant because the margins on its Model 3s, its kind of mass market vehicle, are higher there. So it wants to get those domestic Chinese and export cars, you know, really ramped up. And as we've reported, according to sources, it's also dealing with the same kind of supply chain issues that all automakers are doing. So, you know, what most investors are looking for are executing the basics and making actual progress on all the glitzy things that Elon Musk has promised us over the last 12 months.
One thing that people who've been following Elon Musk for years have come to expect is the idea that maybe something that he promises doesn't actually get delivered. There are many examples of that, at least from a time frame perspective. But the most recent among them is this Plaid Plus car that many investors and Tesla watchers were expecting. He said the Plaid version of the car, well, that's good enough.
Yeah, so there are 2 things here. The first is that Elon Musk has a skill of keeping investors looking to the horizon, looking to the next big thing that's to come. But you're right that along the way, whether it's with the Model 3, we're still waiting on the Cybertruck and semi-truck, of course, the timelines that he sets out during earnings calls or in tweets, they never kind of happen. And if you look at how shares have reacted in the days following big events like this, I'm thinking back to Battery Day or Cybertruck last year or in 2019, shares have fallen in the days that followed as investors kind of take time and think on how far away these kind of projects actually are from fruition. With Plaid itself, it's really confusing, as you said. There was originally going to be 2 versions of this higher spec car, okay? So the Model S has always been Tesla's higher spec, highest margin luxury car. But when they did the revamp, there was supposed to be a Plaid and a Plaid Plus. The Plaid Plus was supposed to be the quickest production car of all time and have 500 or more than 500 miles of range. What Elon Musk said in a tweet was, you don't really need that. So the Plaid version, not the Plaid Plus, is completely sufficient. $112,000 until last night where they raise the price by $10,000 at the last minute. It can do around 350 miles on a single charge and still do 0 to 60 under 2 seconds. The big question is why? What's really going on here? Why did they actually do that? And it's still something that we're getting to the bottom of, and hopefully we get some answers this evening.
Yeah, I look forward to hearing more about that. I wonder about what the product pipeline looks like, because one complaint has been that the cars actually haven't had a significant redesign, specifically the Model S, in recent years.
Yeah, so again, it's inconsistency. Elon Musk said that the Model S and Model X, which were their two volume cars at Tesla, they only ever made them for sentimental reasons. Remember, the mission statement of Tesla is to accelerate the transition to sustainable energy. And Elon Musk has talked about how the only way to do that is to have more affordable models. He's targeting, for example, a $25,000 version of the Model 3, not the $100,000 plus vehicles that the Model S actually is. There's a technology point here that we all want to know about. The next generation for Tesla is based on what are called 4680 battery cells. These are battery cells that Tesla developed themselves in-house and with Panasonic. And our understanding was that the Model S Plaid Plus was going to have this next generation of cell, along with the Cybertruck and the semi-truck. Now, Model S Plaid Plus is not happening anymore. And we don't have any clear updates on the 4680 cell, other than in the last earnings call on April 26th, when Elon Musk said they were around 12 to 18 months away from serial production. All we're trying to do is connect the dots. If Model S Plaid Plus is scrapped and the 4680 cell is not anywhere near serial production, then what does that mean for Cybertruck and semi-truck? Because we thought that those products were supposed to have those new generation of cells. And because Tesla doesn't communicate in the way that a normal car company does, it's hard to get to the bottom of.
Hey, we only have 30 seconds left, Ed, but shares of Tesla finishing the day higher by just shy of 1.9%. Analysts, 19 have a buy rating, 13 have a hold, 12 have a sell rating, according to the Bloomberg. What are analysts telling you about how they're thinking about investing in Tesla right now? 30 seconds.
Yeah, I think, look for real progress on software, the self-driving software. When does that come into the real world? That's what analysts want to know. And then execution. Every quarter with the deliveries numbers, can they exceed them? Can they demonstrate that they are ramping up to big global volumes to cement their place as the incumbent in the electric vehicle space? Analysts just like to see the basics done well.
Certainly remains to be seen, Ed. I know you're going to be watching tonight's event closely. We're going to have to check in with you tomorrow, and even perhaps later today, if you want to stay up late for the latest. Ed Ludlow is auto reporter at Bloomberg News, joining us from the Bloomberg 960 studio in San Francisco. Well, coming up in just a few minutes, you're going to hear from my interview along with Carol Masser of Jimmy Buffett, the other Buffett we talk about right here on Bloomberg News. This is Bloomberg Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It certainly is. Tim Stenivec in the Interactive Brokers Studio in New York, just after 4:30 p.m. Wall Street time here in New York. Coming up in just a few minutes, Carol and I earlier today had a chance to speak with Jimmy Buffett, the legendary Jimmy Buffett, all about opening the new Margaritaville Resort in Times Square. We are going to bring that interview to you live in just a few minutes. A bit of a hint. We get into cryptocurrency with the man himself, Jimmy Buffett. In the meantime, let's get a check of the latest business news with Charlie Pelley.
Thank you very much, Tim Stenivec. Let's begin with crypto. Bitcoin down now by 1.1%, 35,999 on Bitcoin. The Dow, the S&P, Nasdaq all advanced today. We saw the S&P at a record up 19, ending the Thursday session 42.39. New high there, up by 0.5%, extending the gain year to date to 12.8%. The Dow up 19, up 0.1%. Nasdaq up 108, gain there of 0.8%. S&P at a record. Treasuries gained after the CPI report this morning. 10-year up 16.30 seconds. 10-year yield 1.43% right now. Gold up 0.5%, 18.98 the ounce, and crude oil, West Texas Intermediate up 0.3%, 70.17 a barrel. Well, as for the market backdrop, Hillary Kramer is president and chief investment officer at A&G Capital. She was our guest right here on Bloomberg Business Week.
I think that there's been some second thoughts because here later in the day, industrials, materials, financials started to lag. So this may start to register, and the wage inflation is a significant problem for the margins on so many companies.
After the bell, we did hear from a number of companies, including shares of Dave & Buster, PLAY on the ticker. Earnings came in better than estimated there. Shares up now by just about 5.5% on Dave & Buster after hours. GameStop shares plunged today, pairing this year's astronomical gains after the company said it planned to offer more shares and disclosed that regulators are investigating trading of its stock. GameStop plunging today by 27.2%. Also, after the bell today, we got word that the Chinese ride-hailing company Didi revealed a $1.6 billion net loss for 2020 as it moves ahead with plans for a U.S. IPO. I'm Charlie Pelley. This is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. Well, earlier today, Carol and I had a chance to speak with singer-songwriter Jimmy Buffett and Margaritaville Enterprises CEO John Colan about their Margaritaville Resort in Times Square. It is built to the tune of $370 million. And in this excerpt, the guys explain why they chose New York City. Take a listen.
As a performer, it always was said to me that you had to take New York no matter how popular we were elsewhere in the country, and that was something that was difficult to do, but I took it as a challenge. But once you're here and you connect up, it's one of the most delightful places to be. And I've had a summer home out on Long Island for a long time and was always coming into the city and got involved in musicals. And so, and let's say I've frequented a few bars on this island. And I thought when this all came together, you never really know how it all happens, but we've had enough magic in turning this 5-minute tune into a brand that we just kind of follow the universe on where it takes us. And
yeah, well, John, speaking of that magic, how do you get this across the finish line, especially in the midst of a pandemic?
As Jimmy always says, it takes a lot of people to help you, and we had great partners, including the city of New York. But I would say, while New York obviously has an enormous number of visitors, there's really no resort in New York. So this gives people an opportunity to visit and go on vacation in Times Square.
Well, talk to us about if we go and visit, because there's a lot of moving parts. There's bars, there's the resort, there's the hotel, of course. So give us an idea of kind of, if somebody visits, what are we going to see?
Well, you're going to first of all, you're going to have fun. You're going to walk in from one of the more frenetic towns in the world to, as Jimmy said earlier today, an oasis. And you're going to take a deep breath, and you have a drink, and you're going to be able to see the Statue of Liberty without getting on a ferry, and a fabulous show designed by Jimmy to his music. Then you'll come upstairs, and you'll have the choice of 8 other bars, fantastic views. You'll feel a little bit like you're on a cruise ship in your room. And then you get to go out to check out a bunch of other bars. And a lot of wonderful food, retail opportunities. And I would say it's a real combination of entertainment and hospitality.
You guys know New York City is an incredible place to do anything, but it can also be very difficult. And Times Square, I've seen a lot of restaurants, I've seen a lot of hotels open and close in the same year. I've seen a lot of Broadway shows open and close in the same year. So what is it going to take to make it successful financially? And are you seeing already, demand in terms of rooms and people wanting to be there?
Well, I think the first thing is that while there are a lot of hotels in Times Square, there's not a hotel in Times Square where you can jump in a pool 12 months a year.
Good point.
So it separates us, I think, in a fairly material way. And this is a very profitable business because while it's fun to drink, it's also profitable to drink.
Well, are you guys seeing already demand in terms of people wanting to come stay at the hotel? Can you give us any indication
Yes.
or can you give us a little idea of what kind of demand you're seeing?
Absolutely. The advanced bookings are very strong. Obviously, our timing, which we didn't control, the brilliance of American science did, is fantastic. There's a lot of pent-up demand. People haven't been able to have fun for a long time. And it's a bit of an allegory, really, for the comeback of not just New York, but America. Everybody could sure use a visit to Margaritaville.
Everybody could sure use a visit to Margaritaville. That was, of course, the legendary singer-songwriter Jimmy Buffett, also Margaritaville Enterprises CEO John Colan, about opening their Margaritaville resort in Times Square. We're going to have much more from that interview a little bit after the break. But like Colan said, once you're here, you catch up. It's one of the most delightful places to be. Actually, that was Jimmy Buffett who said that. And then also, Colan started talking about the timing and the brilliance of American science, the pent-up demand, referring to how even though they're just opening now, and this was many years in the making, they are already seeing demand for the rooms. Again, $370 million is the cost of this development, the new Margaritaville Resort in Times Square. In just a few minutes, we're going to have much more from that interview with Jimmy Buffett. In the meantime, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nancy.
Hey, Tim. President Biden says the U.S. will start shipping 500 million COVID-19 vaccines to countries in need by August, with no strings attached.
We're doing this to save lives, to end this pandemic. That's it. Period.
Biden is in the UK and met earlier today with British Prime Minister Boris Johnson. Well, Defense Secretary Lloyd Austin is assuring lawmakers the administration really does need $715 billion for his department. That's $11 billion more than Congress enacted last year.
Republicans, including Senator Roger Wicker, pointed to China's growing strength.
This is an inadequate defense budget.
Secretary Austin.
Our budget request will help us match resources to strategy, strategy to policy, and policy to the will of the American people. It funds the right mix of capabilities that we need most to defend this nation now and in the future.
Austin was asked about possible use of air power in Afghanistan, even after the U.S. military exits. He said only that some current air missions originate in the Gulf, and some could be added in neighboring countries. In Washington, Irv Chapman, Bloomberg Radio.
FBI Director Christopher Wray says the biggest threat in the U.S. right now is violent extremism motivated by ideology. He, too, was testifying today on the Hill.
Violence in any form in support of any set of beliefs cannot and will not be tolerated, because violence undermines one of the most basic freedoms of all Americans, the right to feel safe and secure in our own homes and communities.
Ray came under fire for the intelligence failures ahead of the insurrection January 6th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that update, Nancy. Well, a piece in Dow Jones earlier today caught my attention, Charlie. By the way, Charlie Pellet joining me, Tim Stenovec, in the Bloomberg newsroom in New York City. Charlie, the city that never sleeps wants a nightlife museum.
You know, I saw this story. My initial reaction was yes, 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 a nightlife museum. You think about all of the clubs that have been in New York, Brooklyn over the years. You know what? As we do this story, we got to have a little music here.
Oh, look at that.
Yeah, exactly. You know, who can ever forget this song? All right. You're riding the car home, you're dancing already.
Are you saying that
I'm not saying I'm that old, but I'm saying what I'm saying here is that we need, a museum for New York City is something that you need. I think back to the heyday. I mean, TMI. Back in the early days when I first came to New York, I wound up hosting a cable TV show from a nightclub, and part of my shtick was dressing up as a gorilla and seeing this gorilla dancing. This was at a club called the Underground. It has now turned into a Petco. You can still see the Petco. You can still go into the place and see where the stairs used to be down to the dance floor. I ought to be in this museum.
I was just going to say that, Charlie. You took the words right out of my mouth.
And I would be there all night long, getting up at 5 a.m., then heading out to Jones Beach next morning. But that's another story. But anyway, this was at Union Square. We had great clubs in New York like Limelight, Area, Danceteria, Studio 54. I was there at Studio 54 during the waning days when guys like me would be allowed in. Who did I see there? Rick James, of all people.
Charlie, you need to be part of the design of this museum.
There were just so many great times in these clubs back in the early 80s. And also, too, just let me say one more thing.
Please.
Back to some of the great music that was around during the early 80s. Those were the days when a guy like me who couldn't dance was dancing in a club because the music was so great. You had guys like Dave Wilson, CBGB, another fantastic club that is so full of history, too.
Well, it's a story that caught our attention. It's in Dow Jones. It's by Charles Passy. You got to check it out. The city that never sleeps wants a nightlife museum. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Shares after hours, ticker PLAY, up now by 5.1% after reporting earnings. It was an up day on Wall Street with the Dow, the S&P, and Nasdaq all advancing. A record day today for the S&P, up 19 at 42.39, up 0.5%. The Nasdaq 100 index climbed 1% today. Nasdaq Composite Index up 0.8%. Again, the S&P up 19 to a record 42.39. The Dow up 19, up 0.1%, 10-year yield 1.43%. Gold up 0.6%, 18.99 the ounce, and West Texas Intermediate crude up 0.2%, $70.11 a barrel. I'm Charlie Pelican. This is Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get back to our conversation with singer-songwriter Jimmy Buffett and Margaritaville Enterprises CEO John Colan, who are opening a Margaritaville resort in Times Square to the tune of $370 million for this development. Check it out. Hey, Jimmy, you've been doing this for quite a while, and you've built an incredible brand. And I do wonder, I wonder what you want your legacy to be. I wonder how you want people to think about you.
Well, I'm not gone yet.
I know.
Last time I looked, I'm still here. But it's a great question because I've thought about it. It's legacy time. Listen, I've been very lucky, and I've had a few turns around that could have gone the other way. But I'm still here, and want to have fun. And the thing of it is now, it's the fact that I'm looking at legacy in a way that I think that there's an absence of young performers out there in our world, live performers. And what we're trying to do is create like a camp or something that we can teach people how to get on a stage and how to really perform. You know, in the age of streaming and the age of DJs and all, still live performance is something that unfortunately is not where it used to be.
Right.
In terms of the number of bands that are out there that can really go perform, as opposed to solo artists or people that are, you know, that can use the technology to replace live music. And I always think that one of our great assets that we learned a long time ago was, you know, bang for the buck at a show, but also to stay there and keep going. And because it means something, you know, I kind of knew we had a brand a long time ago, but I didn't know what to do with it. So I found John and I said, look, you know, I can't pay you what you make in New York, but we can be partners and you can come to work in shorts. So that started it, and here we are.
Well, it's worked out incredibly well for both of you and for customers as well.
Yes.
John, I want to know how you're going to reach that next generation of parrot heads. How are you getting those younger consumers into Margaritaville right now?
You know, truthfully, it's really very simple because they've grown up on this music with their parents. The most special time families have in their lives are vacations, and the soundtrack to those vacations has been Jimmy's music. And so the awareness is handed down. We're actually on college campuses with a college ambassador program. We're on over 400 campuses. We're obviously affiliated with Landshark Beer, and beer is a young person's game for the most part. So it's really not something we have to work at very hard. It's quite organic.
So one last question, guys. I have to say, in the lead up to this, Tim and I have been talking around the newsroom, like, we're going to interview Buffett. And they're like, Warren? And we're like, no, Jimmy Buffett, the other Buffett. You guys are actually friends, Jimmy. And we're curious, do you talk business with him? Do you talk investments with him? Do you drink margaritas with him? Like, I'm just curious about that relationship.
If you were a distant, maybe cousin of Warren Buffett, you'd call him too. And we've been friends for a long, long time. We were introduced by his sister Doris to my mom when they went on a genealogical kind of trip. And that was the first time that she said, you know, you ought to meet Warren, you ought to buy Berkshire. And that was like in 1972. And I did both.
Wow. Have you bought Bitcoin?
And yes, yeah. I know what Warren thinks about it, but you know, it is, yeah. A little dabble in there doesn't do anybody harm, you know. I think in the entertainment side of it is pretty interesting. I'm looking at how you could tickets to me is an interesting thing of how you could control maybe scalping it in the long run. You know, I don't see anybody that's done anything about it yet that has actually worked. But this could be a possibility. That's what I'm kind of looking at. Yeah.
Well, I got to say, when it's 5 o'clock...
I'm not going to buy a $70 million painting, don't worry. But I'm looking at tickets.
All right, no NFTs there, it sounds like.
No NFTs there, perhaps, but getting into crypto, interested in Bitcoin. That was none other than singer-songwriter Jimmy Buffett and Margaritaville Enterprises CEO John Colan. They are opening the Margaritaville Resort in Times Square. Well, in the last few minutes of our show on this Thursday afternoon, I want to welcome Joe Matthew to the Bloomberg team. Our listeners in the Boston area and perhaps Washington, D.C. certainly know his voice from his years on the radio and television in those places. Formerly of WGBH in Boston, also formerly of Washington, D.C. Joe, welcome to Bloomberg.
Well, thank you so much. It's wonderful to be here.
You were the new host of Sound On.
Yes.
And tell us exactly how you're thinking about the show.
Well, we're going to continue the same mission I think that Sound On always carried, and maybe we'll enhance it a little bit with some great people who are going to help us understand what's going on today in the president's trip and what will be the G7 starting tomorrow. But, you know, look, we're about breaking news. We're about connecting the dots at the end of the day from programs like Balance of Power going all the way back to Surveillance in the Morning. And it's hard politics. It's policy. And when I say hard politics, I mean not the games that end up on, you know, cable news every day. And so we're going to try to cut to the actual hard news that's going on.
Well, there's no shortage of that in this day and age. Talk to me about today's show and specifically how you're thinking about G7 and Biden.
Well, that's right. You know, there was a remarkable announcement that we heard together, you know, during David's show on Balance of Power this morning. 500 million doses of Pfizer vaccine being pledged by President Biden. The timing's pretty interesting, right? He was coming out of this first bilateral meeting with the Prime Minister and making that announcement almost like a grand public relations campaign from Washington to the world ahead of the start of the G7. It's an interesting posture that he's chosen to take ahead of this meeting.
You know, it's so interesting that you bring that up because we were talking about this on Quick Take and on the radio earlier today, and it's the idea of the transition from the Trump administration and the way the Trump administration and, as a result, the United States was viewed on the world stage. Right. The idea of America first. It's not a phrase that's necessarily been uttered in the Biden administration.
No, it hasn't.
But some of the policies that are a continuation of the America First policies under Trump, and I think it's fair to say that when it came to vaccine distribution in the early part of the pandemic, that was certainly a way that a lot of people viewed the United States.
That it was America first.
It was,
yes.
Yeah. This certainly a different posture coming from the president.
Well, and of course it coincides with a major downturn in vaccination rates here in the U.S., and he's also calling on other countries to answer the call, to set an example, say other countries who have a big pool of vaccine, you need to get involved as well. I wonder who or what those countries are.
Yeah, I also wonder, too, just specifically about the way that the Biden administration's first trip is going to be viewed. I think back to what the Trump administration did, right? That first international trip was the Middle East.
Yes, that's right. And we've chosen to go back to our old friends, right, and reestablish ties. At the same time, trying to set the stage for this meeting with Vladimir Putin. And there's no probably better way for Joe Biden, at least in the view of the White House, to do that than by consolidating this G7, reestablishing old alliances. So you've got that behind you when you go to meet with Mr. Putin.
So we're going to be certainly keeping an eye on that.
Yes.
Joe Matthew, the host of Sound On. It happens each and every day at 5 p.m. Wall Street time right here on Bloomberg Radio. Welcome to Bloomberg. Cannot wait to tune into the show a little later. Well, that's going to do it for Bloomberg Business Week. Sound On with Joe Matthew coming up in just a few minutes. This is Bloomberg Business Week. This is Bloomberg Radio, and this is Bloomberg.